the role of KYC checks, AI, ML in designing credit rule engines. What are the guidelines for digital banking and use of AI?
I mean, you know, maybe about 15, 20 years back, when I started, I knew customers used to, come to a bank or come to an NBFC, sign a physical application, give a voluminous document to the front office, wait for their turn, and of course, wait for days to come, and then suddenly they get either a rejection or an approval. I mean, that was journey. I mean, it could be any product, it could be a corporate banking, it could be retail asset, it could be just applying for a credit card. I mean, today, it's a journey, seamless journey that you have. While it's a seamless journey, I think, like all of us spoke about the opportunity, the challenges. I think we're just scratching the surface. I mean, we just, just a tip of the iceberg, and we're far, from implementing, the complete fury of technology. I think we're still far ahead. I'll just break down the journey into three parts. How the customer onboarding process, what is actually the internal process that happens, while the customer actually orders from a menu. He orders, say, a home loan or a personal loan, and then you have your cooks inside, cooking the food and then giving it to you. I think probably a lot of people would be interested in what is it really cooking inside. So I think the first thing is about really ordering the food. Today you have all your KYC management, you have your eKYC, you have your CKYC. Today there's an app, which customer need not kind of go to a bank. His credentials are integrated. You have a DigiLocker, and of course AI. While we are talking about AI, still there are a lot of other fintechs that kind of use your data. While and of course there is a process by which the customer applies. And what has happened inside? I mean, while process the data, as Shivakumar said, today you have 2 minutes, just real-time processing of data. While we we used to have manual processes to underwrite proposals. It could be starting from a 5,000 loan of a microfinance to 100 crore of corporate banking. I think today all those things are part of fintech, where I, of course, 𝒂𝒏 is a partner for us, and we know how beautiful the system works, and how the financials are analyzed. A lot of us spoke about alternate data. So today, what is happening? I mean, you're actually increasing the number of people I serve. I mean, the underserved or the unserved market. Maybe earlier we never had the opportunity to serve them because we didn't have a digital footprint. Today, you have a alternate data. You have fintechs which purely work on alternate data, and thereby increasing my span of control on the customers. And of course, today the customer also has the ability to borrow at a very convenient rates. While processing farmer loans, where you have geospatial data, it actually gives you the kind of coverage on farm. What is the kind of humidity? What is the kind of yield? How the crops is going to behave. I think these data were not available earlier, and today fintechs are amazing. Technology that you have using AI and ML, land records. In the countries, 80% of the lands are digitized today. I don't need a lawyer to kind of scrutinize my legality of the document. Today there are fintechs who can do that just by giving the address of the land. And as one of the panelists said, we have Vahan, 𝒃𝒑, where my due diligence happens real time. You don't need to go physically to do the due diligence of the document. And of course, we're working on too many BRAs, business rule engines. There is business rule engine for every decision that you want to take. So that is also an instant gratification that you give to customer.